Good afternoon. This is Tom Alexander. It is Saturday, February 25th. This is about 3:26 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the video addendum to the written report that I do every week that I send out. If you are not receiving this report, you probably found me on YouTube. And if you would like the written report, please send me an email to tom@alexandertrading.com. I'll put you on the list and you will get all the free stuff that I send out. Also, if you'd be so kind, it would be extremely helpful if you find value in the video, if you will subscribe to the channel, and if you will like it, and if you'll make comments. If you make comments, I will respond to everyone. I'm happy to answer questions. Okay, so let's talk about where we are. The indices are, in my opinion, at a pretty significant inflection point. We could be on the verge of the final stages of a downside washout. We were down rather strongly last week. I think on Friday, we closed down again at a down close, and I think that's 5 out of 6 days. That's getting a little bit rare for the stock index futures, and it typically occurs in washout types of scenarios. So let's look at some charts and talk about things about what might be setting up next week. So let's look at my screen. I'm going to start with the chart of the monthly Dow. And I'm going to show this from a different perspective in just a minute, but I think this is where we are. We're in a balance area in the Dow of 4 weeks duration. And it's a really tight range, and we closed on Friday at the low extreme of that range. This is one of the reasons I think we are at such an important inflection point in all the indices. If the Dow breaks below this level, there's really very, very little support. It's truly in the abyss to the downside. And if the Dow is going to crater, and I thoroughly understand the differences between the indices, and in particular the Dow and the other indices, it's 30 stocks, it's larger industrial type companies, etc. I don't care. If the Dow is going to crater, everything else to one degree or another is also going to crater. So this is something I'm watching very intently over the coming week. Now let's go down in time frame and let's look at the Dow. This is the daily chart of the Dow, and this is that balance area, okay? And the balance area that we're looking at really began back in early November, thus multi-month. So this is one balance area, what you see on my screen. You can see where we closed. We closed in the low extreme of that balance area. So you're going to get a sharp move away from here. Now, if all 4 of the U.S. primary trading indices, the Dow, the NDX, the SPX, and the Russell 2000, the RUT, close above Thursday's high, that's potentially very bullish. However, if all 4 of them close below Friday's lows, I think the washout scenario will hold sway and we could go a lot lower, a lot quicker. Now let's take another look at the Dow in this particular structure from the profile perspective. Each one of the profile units you see on my screen is 1 month. It's a 1-month profile. Market profile, you have to be careful when using market profile because we put chronological constraints on it. In other words, what you see here is one month of a profile unit. We can go down in time frame where each slot is 30 minutes, each slot is 60 minutes, each slot is a week, et cetera, et cetera. So you have to be careful with that. So you want to view this to see the auction, and the auction is an ongoing process. It's not something that is necessarily chronologically defined. The market profile graph is its highest use is to identify market condition, and this is a poster child for being able to identify market condition. We are coming out, and once again, we're in a balance area that began back in November. This is all one auction, and this is in the written report, by the way. This is all one auction. Now, within that auction, there is a shorter term auction, which is the February trade. Now, it looks like we're trading initiatively lower out of this balance area break. If this is the beginning of an initiative move outside of the larger degree structure, there really is nothing between where we closed on Friday and down here near the low of November. So this is another view of that auction and the auction process. And again, this is in the written report. If you're not getting that report and you want it, send me an email to tom@alexandertrading.com and I'll send it to you immediately. Okay. So that's the Dow. Let's look at let's go back to the cash indices. So here's the Dow. Let's look at the S&P, the SPX. And the SPX stopped on Friday right at its 200-day moving average. Otherwise, it's really in the middle of nowhere. There's nothing below Friday's low, and at least down around 3,900. I have 38.98 to 38.74 highlighted here. And that's also an important level because it's the breakout level of this balance area that formed back in December into early January. We broke to the upside. So this would be another test of this area. But below Friday's low, this is the only identifiable potential support from an auction market perspective. Now let's look at the NDX. And here's the NDX. And we closed on Friday right at the 200-day moving average and right at an area that contains a gap. It contains lows. So it's also important for other auction market reasons. That said, below about 11,825, it's truly in the abyss. And where it stops is just a total absolute guess, because there's less and less from an auction market perspective all the way down to here. Now, I'm not suggesting that if this comes out, we trade straight to this level. As a matter of fact, I don't think we will. That would be basically a crash. Now, we can have a washout without a crash. We could have a washout of 5 or 6%, and we'd still be above this level. Let's just see, just for fun, since I threw that number out there. This is 8%. So 5 or 6% would be somewhere in here. That would qualify if we trade straight down here by, say, Wednesday. That would qualify as a washout type of trade. Just to give you an idea of what I mean when I say washout. Okay, the Russell. Now the Russell has held up remarkably well. This is Friday's low. The only reason I have this level marked is because it's Friday's low. Below Friday's low, there really is nothing in the Russell from an auction market perspective until you get down to this pivot low right here that coincides with the 200-day moving average. Let's see how far down that is. That would be from Friday's close. That would be about 3.5%. So that's not unrealistic if we're in a washout scenario to see that level reached by Tuesday or Wednesday of next week, potentially. Now, again, if we do close above Thursday's highs in all 4 of the indices, it would be a pretty good signal that the washout scenario is not underway. And it could be quite a bullish signal that higher levels are going to be tested. If it happens, I will be sending out updates to members. I do, every single day, I do a live trade room. It includes updates in the morning, updates at night on all the things that I'm discussing here on a weekly basis. All right, let's take a look at the technical situation of the market. I'll come back to this chart. I want to begin with this. This is breadth. Now, I use NYSE advancing minus declining issues as the primary tool in my indicator box because it's market generated information. I don't use magic in anything that I do. This is all market generated information. Okay, so what is important to me and what is important in this particular work is how a market behaves based on an assumption about the larger degree market condition. In bear markets, you typically will get clusters of negative 2000 breadth readings in the bear market legs. And that we certainly saw that all last year. Now, until last Tuesday, we had gone 91 trade days with only one negative 2000 breadth reading, and that occurred in early December. Tuesday marked the first one since early December. Now, if we are in this washout decline, I would expect to see clusters or a cluster of negative 2000 breadth readings prior to any sort of significant bounce. However, if this is just a correction in an ongoing bull trend that began off of the October low, then we may have put in an important low at Friday's low. Because what has happened is, and this is typical in a bull trend, you'll have a negative 2000 breadth reading, and then you'll make lower price lows on higher breadth readings, which we did, and then you'll be off to the races again. So again, we get back to why Thursday's high is important. If Thursday's high is taken out in all four of the indices, the cash indices, the SPX, the RUT, the NDX, and the Dow, close above Thursday's cash market highs, then there is a potentially bullish scenario underway. Okay, let's look at VIX. Now, VIX has been stubbornly high. It has been for over a week now. It has been it's been fluctuating, but it has not closed below negative 20. Now, if you notice here, the important lows since last January's top, January a year ago's top, the important swing lows were accompanied by VIX readings of 30 plus. We haven't had anything close to a VIX reading of 30 plus since October. So if we're going to have a washout scenario, what I would expect to see is it be accompanied by VIX readings of 30 plus. So guys, we're going to have, as usual, an interesting week. I hope you found value in this. And again, please subscribe, like, and make comments. If you want to receive the written report and you're not doing so, shoot me an email, tom@alexandertrading.com. Have a great week.